Markets are breaking down. Inflation is rising again, jobs are weakening, and even the Fed can't agree on what to do next. Most people see danger, but what they don't realize is that this chaos might actually be the setup of a lifetime for crypto. Because while fear is spreading across Wall Street, something much bigger is happening beneath the surface. The latest Fed minutes revealed something we almost never see: division. 2 Fed members wanted to cut rates immediately, while the majority said inflation risk is still too high. That split is rare, and it tells us one thing: the Fed has lost its clear direction. Meanwhile, tariffs are driving prices up on everything from clothing to electronics. Companies like Estée Lauder are already warning of major hits from higher costs. And big retailers, Walmart, Target, are showing weaker earnings. Even higher income consumers are now bargain shopping. That's not normal. But here's the bigger question: if the Fed is stuck, who's already preparing for what comes next? The answer is Wall Street. While the Fed argues, the biggest institutions are making their move. Not into Bitcoin this time, but into Ethereum and stablecoins. ETH has just broken out of a 4-year downtrend against Bitcoin. That's huge. JP Morgan and other TradFi giants are now openly bullish on Ethereum, calling it a core piece of the next financial system. Why? Because every stablecoin transaction, whether USDC, USDT, or future bank-issued tokens, needs rails. And those rails run on Ethereum, Solana, and yes, XRP. So why is Trump suddenly entering the picture, putting pressure on Fed governors? Because this is where the perfect storm begins. Trump knows he can't fire Jerome Powell directly. But what he can do is target individual Fed governors who resist cutting rates, and replace them with people who want immediate liquidity. We've already seen him go after Lisa Cook. If he succeeds, the balance inside the Fed shifts fast. And when rates finally fall, liquidity floods the market. Every single time in history that's happened, Bitcoin and XRP have surged. This time, with trillions lining up in stable coins, the impact could be even greater. So what does that mean for you as an investor? Let's zoom out to the bigger picture. On one side, you have a broken fiat system, rising bankruptcies, higher unemployment, inflation creeping back. On the other, you have digital assets with rules that can't be manipulated. You can't print more XRP. You can't inflate away Ethereum. Add Wall Street adoption plus Trump's push for liquidity plus the Fed's division, and you get a setup almost too perfect. Analysts are already projecting ETH could run far higher, and XRP between $10 and $40 purely off stablecoin demand. That doesn't even factor in ETFs, Ripple partnerships, or Swift integration. This isn't hype. It's mechanics. A divided Fed, political pressure, and Wall Street's new bet all colliding at the same time. And if history is any guide, these projections may actually be conservative. So here's the question: do you think Trump's pressure will succeed, or will the Fed hold the line? Drop your thoughts in the comments, because this is one debate that could shape the next bull run. And make sure you subscribe, because the chaos is just getting started.